The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Big Iron Auctions, customer satisfaction is our #1 goal. As the 40-year leader in auctions for agriculture, real estate, livestock, construction, and transportation, we are here to serve you. Big Iron will handle everything from start to finish. From meeting with you, to prepping your equipment, writing the listings, and collecting buyer's payments, let us do the heavy lifting for you. We love our customers, and we treat them like family. There's a Big Iron sales rep in your area, so let's get together. To learn more, visit bigiron.com.
Iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Sean Hackett. Sean Hackett is with Hackett Financial out of Boca Raton, Florida. He's nice enough to come on and talk about what's happening in the world of commodities. Sean, how you doing this morning?
I'm doing good. Real good.
Doing good, man. Well, been some reports. I've been talking to some fellas out in the east of me, eastern Nebraska, Iowa, Illinois, Indiana, and just kind of feeling around. And the reports that I'm getting is that the corn crop is looking great, and even though the soybean crop looks great from the road, and not that it's bad by any means, but the bushels that they thought were going to be there aren't quite showing up. So I guess, what are you hearing from your folks, Shawn, and are you feeling something similar to what I'm talking about?
Multiple conversations in a wide geographic area, the early harvest soybean yields are very disappointing. It looks like a lot of the pods are empty or small beans, and the combination of excessive wetness in some areas, and then of course very dry and hot in the tail end here. It just seemed like it's just not going to deliver, and that the yields are too high, and that the USDA will need to come down fairly nicely here, I think, in October and beyond. Corn, I think they got the number, 182 to 185. Pick a number and go with it, but I think we're comfortably in that range, and I don't see it breaking out or below that range. I think, as you said, corn yield looks pretty solid to me. No surprises, but no surprises on corn. But I think surprise on soybeans is they're going to have to bring the yields down, and those what appears to be overburdened cementing stocks are going to become not as bad. And we were trading 30-year, 35-year high in ending stocks. So if we're going to trade something less than that, that means that we've already traded the highest supplies we're going to trade for the foreseeable future, which is when the low is made. So it looks to me like that 9.5 to 960 area that we traded on November means that's probably your low here for the foreseeable future. 585 corn on December was likely, a major low. That we're not likely to see again. It just seems to me, with corn demand being strong, we're going to be putting ourselves somewhere between 1.8 billion bushel and 2 billion bushel carry out for the U.S. over the next few reports, and that's probably closer to a 450 market, Casey, versus a 350 market, which everyone was anticipating just a few weeks ago. So not that 450 is like the best price we've ever seen, right? Everyone's going to go out and buy the next $1 trillion combine, but 450 works a heck of a lot better than 350. So
definitely does that for sure.
So to that extent, I'm pretty optimistic farmers are going to be able to make the balance sheet work. I guess that's the point I'm trying to make, that the dire nature that we were at a few weeks ago and the darkness that we were at, it was overplayed, in my opinion, and we're going to get something more reasonable. And obviously, if this Brazil drought were to perpetuate into the end of the year, then we could have some prices that go up considerably higher than that. But for now, I'm going to go with that target until we can better ascertain if this 1 in 100 year drought in Brazil, really starts to carve into the core growing season of Brazil. So
let's talk a little bit about Brazil while we're on that topic. It seems like their drought situations are increasing. You had a nice display of that on your last Real Vision report that you sent out, and on your last newsletter you had that last interview. Very good information there. I mean, as you look at this, Shawn, South American weather was always one of those kind of, every so often you'd see something pop up that you'd have to do it. But today, this last 2 or 3 growing cycles, it looks like to me that the weather in Brazil has become a bigger story and almost a hinge point now on every growing crop, or every crop that we've grown in North and South America here when it comes to soybeans and corn. I guess when you look at this, we've talked about this on here before, but as you look at it right now, things are stacking up to where they're going to have some issues with the soybean crop that they're planting right now.
Something has happened to the Brazilian moisture pattern. We've talked about this before, and I talked about it in my conference speaking deals, and we just have not seen this extended period of reduction in rainfall. It's not just this past couple of years, which have been record-setting, but I mean, you look back in the last 6 or 7 years, the rainfall in central west, central north, central northeast, central south, it's just not getting, the Amazon monsoon is not activating. And we continue to support the idea that this Amazon deforestation has really potentially permanently changed their weather pattern. Doesn't mean they won't have a good year once in a while. I'm not saying that, but I mean, overall, it just looks like they're going to be under the gun much more regularly than they historically have been. And we just never seen anything like this. I mean, last year we made record lows in the Amazon River. This year we've made new record lows in the Amazon River by a fair margin. subsoil moisture. It's just we've just not been here before, Casey. That's I don't want to. I keep hearing everyone say, "Oh, it's September, everything will work out." I don't think people understand that we've had a cumulative, multi-year reduction and lack of rainfall that is just not. It's just far more serious than I think people are making it out, and that's why I'm suggesting that if we get to mid-October and we're not, I'm not talking. Look, Brazil's a big place. There's going to be some rainfall somewhere along the line. I'm not saying that. But to overcome this, we're talking about like Dust Bowl kind of stuff here. To overcome this, you don't need, moderate rainfall isn't going to cut it. Like, you need like serious rainfall to overcome this and recharge the subsoil moisture and get it going. I don't think that's likely going to happen. I think they're going to get some rainfall, but I think it's going to still struggle and be below normal, and below normal isn't going to cut it. When you're in the lowest 1 percentile subsoil moisture in history with, by the way, temperatures 105 degrees, 100 degrees. It's not even summer yet there, Casey.
Yeah.
We're not even in their summer yet. We're already getting 100, 105 degrees central west, central northwest, central north, central south. That's what happened last year. So the evaporation index, if you do get some rainfall and you have 100, 105 degrees, it doesn't really matter, right? Who cares? The rain goes on and it goes right back out because you can't have that kind of heat. I don't know. There's a complacency in the market because there's no example of this really happening in Brazil, that everyone just isn't. They're not connecting the dots, and so I think this is going to be a much bigger deal than many are suggesting. And every week that goes by, Casey, that we're not seeing a material change in the weather patterns, I think that the grain markets, coffee, sugar, orange juice, I mean, you go down the list, cotton, look, they're number one or number two in all these markets, Casey, in terms of exports. Number one, number two. There you have it. I mean, I just think we have and the only country in the world that's had good crops, Casey, is the United States. We had good wheat, corn, and soy. Everybody else did not. Our exports are fantastic. We continue to ship. Our demand for our export demand is phenomenal. So when does the farmer stop selling and lock up the rest of the grain? They're going to do that. They probably aren't going to do that just quite yet, which means you're going to have a little bit of a grinder here for the next 30 days. But once they've sold enough and the bank signs off and hits the checkbox, says you're good, and the farmer says I can cover everything, I'm good, they're going to have to come get it next year, and it could be really unpleasant for buyers if they don't take advantage of the current pricing environment, in my opinion. So,
yeah. Well, you take a look at March corn right now. It's trading about 25 cents. Well, let's see, about 20 cents or so higher than
20 to 25% rally is what we've had. Before yesterday's correction in wheat, we had an 80-cent rally off the lows.
Mm-hmm.
And we had, we had I think from low to high, we had a something like a 60 or 65 cent rally in soybeans. Those are some nice rallies. I'm not sure anyone was predicting rallies at this moment in time. Everyone was expecting new lows, harvest lows. Obviously we were more constructive of the market, but if you are someone that has to sell, you've had a rally now. If you have to sell in the next 2 weeks, well, here's your opportunity, right?
Right.
Sell or bounce. If you have to sell, if you don't have to sell and you can store it, our recommendation continues to be and has been, store your grain. We don't think this is a time to sell unless you have to. And we say if you have to sell a rally, we have it. It's a perfect opportunity to move some grain. And I believe that's why the market will be a little bit of a grinder here. But if you're sitting there undersold, didn't sell the May high, you need to take advantage of this rally because we have a Fed meeting on Wednesday. All kinds of weird things are happening in the world. There could be yen carry trade liquidation. We see these things. You have a 2-week downturn in grains. You're going to be selling the lows again. So don't do that. Yep. Sell the bounce. If you be honest, if you got to sell, you got to sell. I wouldn't sell here unless you have to. But if you have to, gosh darn, you've had a nice rally. Better right. Today than it was a few weeks back. Take advantage of it.
Exactly. All right, Shawn. Before we started recording, you started talking about, hey, cotton was limited up yesterday due to weather issues. Again, it seems like that's the repeating underlying story here when it comes to ag. It's just the weather. And you're looking at some pretty nice rainfall that's come through the south. Some of it's been very, very, very heavy. And you're looking at the bowls are opening up, which is always the worst time to get rain on your cotton crops. So I guess talk a little bit about what's going on in cotton right now.
We've talked about this potential risk on the show, throughout the year.
Yep.
And it's not over. We're going to get more of these. Undoubtedly, there's another one coming already. Very likely we're going to have another Gulf, significant Gulf tropical system in a few weeks. Almost assuredly. Now, I don't know where, I don't know how big it's going to be, but it looks like it's going to be another formidable, at minimum, formidable rain event somewhere between Texas, the deep south, and southeast. And there might be one behind that. I mean, we're not done with the hurricane season really until mid-October. And those bowls are wide open, baby. They're wide open. And this crop keeps getting smaller. From the USDA, the ending stops keeps getting smaller. And the Fed apparently is going to start lowering interest rates and printing some money. And so is the rest of the world doing that. And that usually means demand for economically sensitive commodities is going to do better next year, which means they start pricing it in now. So lumber. I think lumber was limited up yesterday or the day before, if I recall. Things are happening, and cotton is certainly. Look, I'm not saying I'm calling for like this crazy move to $1 and $1.20. No, but I think we were down around 65, 66. We're now at 72. I think there's a really good chance that we rally this market to that 80 cents, low 80 cent area, heading into the fourth quarter, which would offer a great opportunity for cotton farmers to get some cash sales on the books. So I like this market right now. I think it makes a lot of sense what it's doing. And I think that the limit up move was a wake up call on this weather that more is to come, and I don't think we're done pricing in the full extent of the remaining tropical storms and systems that are going to come in to the cotton areas. I think we're actually still got at least one more, if not two more risks to come, and then I think we could say we've traded it.
Yep. Okay. So we got the Fed report coming up
Wednesday.
Wednesday next week?
Well, this week.
I'm sorry, yeah. Tomorrow is Wednesday. Already lost track of my days for the week. It's only Tuesday. So all reports are going to show that, hey, we're going to do at least 0.25% decrease in rates. Your thoughts on that, Shawn, and what kind of ripples you're going to see come through the markets?
I think most people feel that a quarter is not enough. So if they do a quarter, the market probably won't like that. At the same time, people are fearful that if they do 50 basis points, that means they know something is really bad. Like things are much worse than we think, which is bad.
Right.
So it's almost like
it's a double-edged sword.
They can't win either way. I still think it really comes down to not what they do, but what they say. I think they should go down 50 basis points. They should have done a quarter in the last one, and they did their typical snail approach. But I think they should do 50 on this one. I don't think they're going to. I think they'll do a quarter and just say they're planning on doing more. But I'm kind of worried about a negative reaction to it. I think the market's. I'm just worried that there's a better chance of a negative reaction to this, and so we just have to be on. We know outside markets can influence commodities. And so we'll see if we get a kind of a stock market knockdown, or the dollar rallies or something like that. That maybe you get some short-term liquidation of commodities. That's the risk this week. That is the big risk from my perspective, is that there's a negative reaction. We get a couple of day liquidation and commodity markets come under some pressure, not because of fundamentals, just because of capital flows. That's what I'd be worried about. I think that we're kind of backed into a corner here, that we almost, it's hard to win on this one. Like it's hard. Like I don't think the market's going to be happy no matter what. And I'm not even sure what they're going to, what they could say to allay those fears. Because if they say what they're going to say, I think what they want to say is, things are kind of good, slowing down, but we're good. We got on. But the market knows, looking at the numbers, that it's not. I don't know. I'm worried about a liquidation this week, and that's the bottom line. So.
Okay. All right. Take a look at that. Pay attention to that one.
Yeah.
All right, Shawn. One last question here. Let's talk a little bit about what you see happen over on the energy side of things, just from the oil perspective. It seems like oil prices have really slid down into the 60s, and they're kind of banging around that low 70 range. I guess as you're looking at this, is this just another tale of, hey, we're headed towards that slowdown? We're seeing less demand, or what's your thoughts there on the oil side of the market?
Saudi Arabia has a bunch of spare capacity that they've kept off the market, and the market is oversupplied. How long? It's not good, right? It means that we have a serious oversupply. If they were pumping their full capacity, we'd be at $40 crude oil right now.
Right.
I'm just guessing. Maybe it's 45. I'm just saying, we'd be a heck of a lot lower than we're at. The only reason why we're not considerably lower is because they continue to not pump. So, that's a problem. The only way I see that you get yourself out of this is you're going to have to see the economy, the demand for crude improve. But we know there's a significant lag between when interest rates fall and money gets printed versus when the economy starts. Like it's at least 6 months, right? So I wouldn't think we're going to see an improvement in the economy until, I don't know, sometime in the first half of, second quarter, third quarter of 25, something like that, right? So it's tough to be positive on crude oil other than a geopolitical event. And maybe that happens. I don't know how to predict that, right? So, obviously the Middle East is extremely unstable right now, and anything can happen. And maybe we take Iran's production offline, or not we, whatever's going on takes Iran production offline. There could be a spike trade for geopolitics, but based on supply and demand, crude oils, it looks difficult here. Looks like it's a market that just needs to go lower. And at some point, the only way that the Saudi Arabia pays its bills and, covers its budget, it's got to sell crude, and it's not selling enough. If you look how much money they need, how much they're selling, they're running a huge deficit. At some point, they were expected to increase production at the last meeting, and then last minute they changed their mind because crude oil was crashing, right? So, But what happens if they say, we're going to start pumping again?
Prices go down.
It's going to, we're in the 50s. So I'm not optimistic on crude oil. Just the fundamentals don't support that. I don't know how to predict geopolitics. I don't know when Saudi Arabia would start pumping more oil, but eventually they're going to have to. And so there you have it. I just think that if you're looking at energy, if you're looking at trying to lock in energy needs, I simply would be looking at protecting upside price risks on geopolitical risks. I'm not sure I'd be locking in a lot of physical supply right now. I'm not sure that's the right thing to do. I'm not an oil expert. I'm not an energy expert by any means. I'm an ag guy. But to the extent that I know anything about it at all, my feeling would be, protect upside geopolitical risks, but I wouldn't be too excited about locking in a lot of physical supply. I think the potential for substantially lower prices, could be there, between here and the end of the year, especially if Saudi Arabia blinks and starts pumping more oil like they really want to do, and they were going to do it, and then they didn't do it, but I think they're ultimately going to do it. That's unless geopolitics creates a spike trade, and they certainly will do it.
Right. All right. So I got one more energy question for you, and it's about natural gas. Looking where natural gas has been at over the last 30 days, it's kind of hovered around that anywhere from about $2.12 down to $1.90. Now we're back up to $2.37. It's kind of hovered around that 220, 225 range here for the last about 60 days or so. Not a big move there. You did see a big spike up in the summertime where you saw some $3 stuff, which that's probably a seasonal high just because of summer energy demand and stuff like that. But as you look at natural gas now, Shawn, and we're looking at, you're talking about locking in, long-term stuff, and you start looking at fertilizer. I guess, what are your thoughts on natural gas as we head into this, maybe some end of the year input buying?
We've failed to have large Gulf of Mexico tropical systems that really force closures and evacuations of the the deep drilling rigs.
Mm-hmm.
We've seen a little bit of it, but not the big one. And that's that. I still think that there's a potential to get one of those. And you get one of those, I mean, you could put $1 on the natural gas market just like that. Beyond those things, which is hard to predict, when I look at the natural gas going into storage, and you look at we're in the build mode right now, right? We're in the seasonal build mode. This is the most aggressive part of the ascension of putting natural gas into storage. If you look at the normal seasonal behavior, and you look at what we're doing, so we're supposed to be going up like this, and we're doing this, meaning we're not really building stocks, barely building right now at a time we're supposed to be going almost vertical and building stocks, which means supply and demand is actually out of balance for this time of year. And if you run the trend into October, into the end of October, we're going to be at the 5-year average after being at the highest levels earlier in the year we've ever been. Okay, so what the market has done, staying this low, is it's put the brakes on production, and demand is just ripping right now, absolutely ripping, and all these new LNG facilities are now coming online, so that trend's going on. Once we get into the winter season, right? Unless we turn production on, the demand's not going away. And so what I think where we could be, Casey, if we have a front end loaded winter, which is what I believe is going to happen this year. Sometimes they're back end loaded, sometimes they're front end loaded, sometimes they're just warm, sometimes they're just cold. But I'm thinking, front end loaded, meaning cold December, like cold. It's the most bullish way to get natural gas excited is to have a cold December, because if you have a warm December, it's hard to excite the market because you lose a key month of the winter, and it's just hard for the market to make up that loss of demand, right? If you have a really cold December that carries over into January, that we believe we're going to see, it's hard for the market to not get super excited by that, because you're going to be drawing down maximally, and it's hard to take that back in March and April, right? So if we're already not in a supply demand mismatch, meaning we're not really following a normal seasonal pattern, which means there's not enough supply against demand, and we enter an early or a front end loaded winter, then we're going to find ourselves at the low end of the historical range very, very quickly. And so it would be my expectation that if we could get into December and looking at the descent, right? So that here's a normal descent, and we could be descending like I think we're setting ourselves up for things to get really, really tight in the U.S. Really, really tight. And so natural gas, my feeling, I'm completely feel differently about. Natural gas is on an energy equivalent basis is like $12 crude, just just as an FYI in terms of how undervalued natural gas is.
Right.
It's kind of like it's like buying crude at 12 or 15, and it's something like that. So, yeah, I think I'd be locking in natural gas, propane. Fertilizer's a little bit it's a little bit of a different deal because fertilizer prices really have not come down anywhere near as much as natural gas has. The fertilizer companies that bought too much too high and have proactive, they want to sell or trying to keep the prices high and move it. I'm not sure they're going to be successful at that. So I'm a little dubious about how that's going to work out. And I'm not sure 450 corn is necessarily going to save them from having fertilizer prices too high. But the natural gas part of the equation, energy needs from a natural gas propane perspective. I mean, I just think this is a long-term opportunity to lock in the physical, not protect upside prices on paper, but the physical, locking in physical for the next few years. I just think you want to lock in a lot of physical natural gas and natural gas derivatives here. I just think that this is a tremendous opportunity. Whereas on crude, I don't really feel that way, but on natural gas, I really do feel that way. And when you're really looking at the long-term trends, all the energy demand is moving over to natural gas over time. I mean, where everyone's finding a way to try to use more natural gas, more LNG. It's the bridge fuel to wherever we're going, right? So the world has decided it doesn't want to use crude anymore, and we're moving to something else. Now, I'm not sure it's wind and solar, but we're going somewhere else. But because we don't really know where we're going yet, we need a bridge fuel that that everybody can accept, and that's natural gas.
Yep. Okay. All right, Shawn, good stuff as usual. Folks want to reach out to you and get more information about what it is that you're doing over at Hackett Financial. What's the best way to do that?
Twitter page is at Faradex11. We have a website, Hackett, Hackett, advisors.com. We put some interviews and some tidbits on there. Like we just put our Real Vision interview, which is over an hour interview that goes over a lot of our weather cycles and in pretty good detail. And people might want to check that out. It's if you haven't heard that, like we've done on your show too, Casey, we kind of go through the whole scenario in Brazil and all. It might be a good watch for people to kind of get themselves up to speed with how we look at things with our statistics, cycles, and correlations as it relates to climate and making price forecasts.
Right on. Well, Shawn, appreciate you being on the podcast. We'll try to catch you again this week sometime.
Sounds good, Casey. Thanks.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, X, and Instagram. I can't stop saying Twitter. And you can find me over there, even though everybody knows what I'm saying when I say that. But check me out over there. Go to LinkedIn at Moving Iron Podcast, and you can go to the Moving Iron Podcast YouTube channel, which is Moving Iron Podcast YouTube channel over there on YouTube. Check it out there. Go to movingironllc.com for everything Moving Iron related. And still time to sign up for the Moving Iron Summit coming up. So I got a few spots left. Shawn will be there, and he'll be talking about what's going on and what he sees happening, in the overall commodity marketplace. So with that, I'm Casey Seymour, Sean Hackett. Let's move some iron, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers, and close more deals? Reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here.